All right, getting ready. Just about there. Okay, here we go. 3, 2, 1. And we're here. Hello there. Welcome. I'm Mitch Goldberg, your host. Thank you so much for joining me. I'm Mitch Goldberg. If you missed this is my live stream. It's called Be the Boss of Your Money. It's about personal finance. That includes things like investing, leasing versus buying a car, mortgages, you name it. We talk about it here. I'll be having a guest on pretty soon to talk about reverse mortgages. That's a pretty hot topic these days. So what I want to do is not just welcome you, but let you know what we're going to be talking about today. Robinhood, the dollar, and Goldman Sachs big upgraded target, year-end target for the S&P 500, which implies a good deal more upside. Let's see how we're going to get there, what Goldman Sachs thinks. So we're going to roll the quick intro. I've got a good show. I've got to get out here by about 5 to 5 because I have a FPA event. I'm a board member of the Financial Planning Association of Long Island. We're having a happy hour tonight that I'm sponsoring. It should be a lot of fun. Outdoors, of course. And I love outdoor events. So let's get on with the intro. Here we go. All right, that seemed to get stuck. That happened to me a few days ago, but I do have an intro in there. I have to roll it because I do have a disclaimer in there. So let's try that one more time. Be patient, stick around. I see some of you out there already. I'm really happy about that. We're going to talk about Robinhood in 1 second. All right, forget the intro. That really is bothering me. You know, this is unfortunately that's part of the deal with when with going live. These things happen sometimes. Your technology doesn't exactly work the way you want it to. This is not broadcast network. This is live streaming over social media, Facebook, LinkedIn, and YouTube. By the way, you can always catch the highlights. You can always catch the highlights of all of my broadcasts by following me on Instagram. My handle there is at InstaMitchG. You can follow me on YouTube. Please subscribe to my channel if you are a regular on YouTube. Client First Strategy is my YouTube channel. And of course, on LinkedIn, okay, just Mitchell Goldberg, AIF on LinkedIn. That's comma AIF, accredited investment fiduciary. And my Facebook page is Client First Strategy. And of course, if you're already friends on Facebook and you're watching, then thank you very much. And I greatly appreciate you taking the time. I appreciate all of you taking the time to watch my live stream. Your time is very valuable. And it means a lot to me. So let me know where you're watching from. If you have any questions, please hit me up in the comments. If you're watching this in the replay and you have a question, certainly the comments are there for you as well. And I will definitely see your comments, your questions. Okay. So we've got a few people watching. Give it a thumbs up, give it a heart, a reaction, a celebrate button if you're watching on LinkedIn. And let me know what platform you're watching this from, because it's a lot of fun. I get to see who's watching it. It helps me tune my message a little bit and gives me encouragement to keep on doing this, because doing a live stream every Monday through Thursday for almost 2 years is actually a lot of effort coming up with material to talk about. Josh, I see you, buddy. Thank you very much. Josh, you were like such a good friend. I really appreciate you joining me all the time. And, I really appreciate it. It means a lot to me. Thank you very much. Means a lot to me. Thank you very much. All right. I love doing that with the camera. All right. So, what do we want to talk about first? Okay. Thank you, buddy. Josh is out there. So, first, we're going to do a quick review and an update. I want to give you the reason why the market rebounded because yesterday was such a negative day. And today it's like the complete opposite. And it's making people's heads spin. And part of this is because we're going through a constant hey Nelson, you know what, Nelson, you were here yesterday, and you are first of all, thank you, Nelson. Thank you very much. Um, you are the reason why I want to talk a little bit more about the dollar today, because that's what you asked about yesterday, and I realize a lot of people have questions about the dollar, up, down, strong, weak. What does it really mean? I'm going to give you like a high view of it, like the 40,000-foot view of the dollar, and so thank you very much. See, this is where I get my best ideas from, when people who watch my live stream ask questions or send me a DM or something, and I get to talk about that, and I love it. It's a lot of fun, and it's very, very gratifying. So let's throw up the screen here. I'm going to make it a little bigger before I put you guys onto the screen. All right, this way you'll be able to see it on your smartphone. Pop myself up in the corner. Okay, here I am. All right, so the Dow up 271 points. Nice reversal from yesterday. Record high. Nasdaq was up. S&P was up. So we're breaking some new records today, and it's amazing because yesterday seemed like such a lousy day. Granted, even 2 weeks ago when the Dow was down 700 points in one day, all the major benchmarks were still right near their all-time highs. By the way, with these averages, the S&P, for example, you can't invest directly into an index, but you could invest directly into a security that tracks or mimics an index. Okay, just want to get that little disclaimer in there. S&P up, Nasdaq up, oil rebounded a little bit. It still up $1 per barrel, but it's just a drop, no pun intended. So let's see. The 10-year Treasury was up a little bit. The VIX continues to hold steady in the 17s. And let's just take a look at the Russell 2000. Russell 2000 was up 1.81%. Okay, if you see that there, okay, up 1.81%. So by far the best of the benchmarks. The Russell 2000, I think, is a benchmark that not enough people follow, but it tracks the small cap index, small cap stocks, and it's a really good indicator for the strength of the domestic economy. When it goes up, investors are confident about the economy. When it goes down, investors are not confident about the economy. And unlike the S&P 500, which could still go up when investors are not confident about the economy, see, the S&P 500 is somewhat divorced from the economy. So when the economy tanked in 2020 because of the pandemic-induced shutdown and the recession that we had last year, but the S&P still managed to rally when the economy was shut down. The S&P rallied hard, set all kinds of new records. Why is that? Because the S&P simply measures the performance of the largest publicly traded stocks, and that's you talk about Amazon, Microsoft, Alphabet, which is Google, Facebook, Netflix, Nvidia. Those stocks did extremely well, even though the economy did poorly, because the companies of the companies of those stocks, they did very well. They are the ones that enabled us to work from home, stay at home, and all that, and they continue to do very well. Granted, Amazon had this past Friday, so almost a week ago, Amazon plunged 7.5% in one day. Is that an indicator that stocks are overbought? Etsy yesterday tanked. Roku tanked. They both had numbers that were disappointing for forecasts. They had numbers that were good, but forecasts that were disappointing going forward. So it looks like a lot more of these work from home, stay at home stocks are starting to tank. And what I said yesterday is maybe it's time for that shift again to get back into the reflation trade. And if interest rates go up a little bit, that would help. The VIX is staying below 20. That's something we've been talking about. And, I'd be remiss if we didn't go to the, to the CDC and the Johns Hopkins map of COVID, but you can see it's pretty much all over the world. And it's just this Delta variant is spreading like crazy. I don't think we go into a shutdown in the United States. Nothing like we did before. First of all, half the country half of eligible adults in the United States are fully vaccinated. Something like 70% of all adults in the United States have gotten at least one shot. And since people are now worrying, US citizens are worrying about the Delta variant, a lot more people are going to get their shot. The numbers are already picking up quite a bit. We take a look at the CDC map. Let me make this a little bit bigger. You could go on this map and basically, let me dragged it too much. So you could basically pick a county. Like I'm going to go to New York. Well, let's go over a spot here. Let me find a place. Okay, so Fayette County in Pennsylvania, for example, is moderate. It's yellow. But so if you're in Fayetteville, you don't have to wear a mask. I don't think you have to really wear a mask anywhere. It's not mandated. But the question is, depending on if you are in a county that's red or orange, then it's probably advisable that you do wear a mask. I do wear a mask, by the way. I am fully vaccinated. Everyone in my family is vaccinated. My wife's and my parents, they're vaccinated. But when I walk through like the common areas of my office building or I go into a store, I do wear a mask just because this COVID seems to be going, the Delta variant is all over the place. And the thing is, maybe Fauci warns more severe COVID variant could emerge. I've actually been reading about that. That's nothing new. There is a potential variant that's circulating in Florida, not the Delta, a new one that has been imported from, we believe, overseas, maybe South America. Let's not get into this whole but the migrants are coming into Texas and they're spreading COVID. No, this looks like something that was flown in, into Florida, not traveled from Texas. That's what I've been reading. I'm just telling you. Okay. So I don't want to get political here. Okay. I'm just telling you what I'm reading. So let's not make this into something that the show is not about, which is, it's not about hate. It's all about love. All right. Show me the love. So if there is a new variant, I'm not sure what makes a mutation in COVID into a new variant, but I believe if a mutation can spread substantially, if it could maintain itself as a stable mutation and becomes more contagious or more deadly or worse symptoms in one way or another, then that becomes a new variant. So it's pretty crazy what's going on. And now companies, from banks like Citigroup to Disney are requiring vaccinations. A lot of companies around the country are saying, we decided to delay our employees' reentry into office buildings for at least another month or two. One company, I forget which one it was a big publicly traded company, said they are not going to have people back to their offices until January of 2022. So these are precautions, but I don't think we're going into the same shutdown that we went to, obviously, in 2020, because something like 80% of all people 70 years of age and over are fully vaccinated. We know a lot more about how to treat COVID, even if it's a worse variant, a worse mutation. But we know about PPE, and we know more about what we have to do. The people who are in states that have low vaccination rates, which for the most part, with the exception of maybe Florida, has a lot of low literacy rates. It's a shame that people are choosing to bypass something that could help them. But then again, I am not one for mandating, vaccines either. But if I do own a large company with people who come in, I would mandate the vaccine if you're coming back to the office. And if you're not coming back to the office, then I could decide if I don't want to keep you, right? That's my right as a business owner, and you certainly have your right as a business owner. And I don't want to get into the whole debate about COVID passports and all that, but it is scary stuff. We have to figure out what we're going to do with this, and I just don't know. But as far as the stock market goes and the economy, pretty much agreed that COVID is not going to stop the recovery that we're seeing now. the economy has so much momentum. It has escape velocity, meaning the economy is moving so fast that whatever's pulling it back can't hold it back. That's what we mean by escape velocity. That is actually a true economic term. Okay, so let's not keep going over and over. Okay, the big thing, Friday's job report. Okay, now just want to say, why did the market go up today? That's what I started talking about after it went down yesterday. I think the scary thing was that we got a really bad private payroll reading. Doing my plosives too much on the phone, you know. We don't want to be doing that into your ears. So we got a really much weaker than expected private payroll reading on Wednesday. The ADP figures, and ADP is the biggest payroll processing company in the country. And it was expected that ADP would tell us that about 650,000 jobs were created. Only about 350,000 jobs were created. So that's why the market went down Monday, and it was Wednesday rather, and it was a scary market. We're thinking, holy cow, maybe the reflation trade is over. But if we're not going to full shutdown, then the stay-at-home, work-from-home stocks don't really have impetus to make new highs because they already did that, many of them. Maybe the market's stuck or in trouble. We're going to need something else to get the economy or to get the stock market moving. But what you saw today is that initial jobless claims came out in line as expected, which is a pretty good number. Initial jobless claims were below 400,000 again. A lot of people came off of long-term economic assistance, payroll economic assistance. So people are feeling a little bit better that tomorrow's big non-farm payrolls that reports job creation for the month of July. So I know we're in August now, but for the month of July, it's going to come out tomorrow. The first Friday of every new month is when we see the non-farm payroll number of the previous month. That's pretty much, those 12 numbers every month. Those are the biggest numbers that we follow, that we all follow in the economy and the stock market. It's also the Federal Reserve is extremely sensitive to that number. It's a very important number to the Federal Reserve. So people are feeling pretty good. The number that we're looking for tomorrow is 845,000 jobs are created in July, but that's an average. Estimates are as low as 350,000 and as high as a little over 1 million. So we need to see, in the 800,000 range of new jobs created. And we'll also get numbers on wage growth, wage inflation, hours per week work. We're going to get a ton of information tomorrow morning, 8:30 a.m. Eastern time. And that will more or less determine the direction of the stock market for the next few weeks. For the next 2 weeks or so. Around August 26th or 27th is when the Jackson Hole Symposium, the economic symposium, is on. That is put on by the Federal Reserve. And we are expected to hear language from Jerome Powell about his plans to start tapering the Fed's bond buying purchase. I've got my buddy Philly out there. Philly, I'm glad your favorite stocks are coming back. Great rally, long for travel. I'm never selling. I do want to be careful about putting individual stock symbols on the screen. I hope you understand. Just something I know that I have to, be very careful about. So, but I do see your post, and I do know you're out there, and I appreciate you, Philly. Thank you. So it's nothing with you, man. It just, I know, my compliance peeps and Rita and Debbie for listening to this. I know you'll be like, Mitch, it looks like a buy recommendation, even though it's from someone else. If you put it on the screen, it could be like you're endorsing it. So I have to, did I lose the volume? I have to be very, very careful with that. All right. So let me keep going. Of course, I understand. Always on point. Thank you, friend. Good friend. And by the way, Filippo was my guest on my live stream. It was like 2 weeks ago or so. We talked all about crypto. We're going to have to do that again because of the London announcement for Ether. So that was a pretty big deal. So, crypto continues to evolve. There's nothing stopping it. Sometimes crypto prices get ahead of the evolution. Sometimes they fall behind the evolution, but it's a story that will evolve in a very, I think, relentless way. I could say that. Okay. So I think the market rebounded today because once we saw the initial jobless claims came in as expected, which is positive for the economy, it was like a sigh of relief. Interest rates went up, and economically sensitive sectors went up today. So it does it does look like the reflation trade is at least starting to come back online. All right. So LinkedIn user says why. I'm not exactly sure why. Is it why I can't say put the ticker symbols up, or let me know more specifically, please, what your question is. I'm not, because sometimes it happens that I ramble on a little bit. I get past a point that I made and I'm on to the next point that I'm not sure which point the question is towards. So if you don't mind, hit me up again, and I definitely want to answer your question out there. Thank you. Thank you very much. And I see a few more people just came into the show. Thumbs up, give a heart, a support, an applause reaction or something. Let me know you're out there, and I'll get to see your name, and it helps me with the show, and it helps with the algorithm, and it's free. And if you, as a thank you to you, I'm going to do what Graham Stephan does. I don't know if you follow Graham Stephan on YouTube, but as a pre-thank you, I'm going to show you a picture of this cute little baby otter. Okay, so that was cute, wasn't it? So let's talk about Robinhood. Let's talk about the hoodlum. So if you call Robinhood people the Robinhood army, and now that their ticker symbol is hood, do we call Robin Hoodies the hoodlums? I'm just kidding. I think I'm so funny. Seriously, you will never meet a person in your life who thinks they're funnier than me. I mean, I think I'm the most funny person ever. I hope that made sense. I think that was funny that I just said that, and now I'm feeling a little awkward, and I'm not someone who usually feels awkward. Okay, so Robinhood was down $20 today. It was up 50% yesterday. It was down over 27% today. Let me get that comment off. What the heck happened to Robinhood? Well, first of all, insiders sold a ton of shares, something like 100 million shares just dumped into the market. Robinhood is not seeing a dime of the funds raised for that money. That is strictly insiders selling. They just went public. Don't you think? Wouldn't you think that insiders should have more confidence in Robinhood that now that they went public? But that's basically what happened. Robinhood basically became its own meme stock, even though they are the purveyor of meme stocks. But once Robinhood was being talked about yesterday on Reddit and the Wall Street Bets community, that was it. It just, the buying went on, the stock took off. And as you can see, meme stocks don't typically stay up for very long. Now, don't get me wrong, the stock could rocket up tomorrow, rocket up and down. And like the other meme stocks like GameStop and AMC and Clover and Koss and Bed Bath and Beyond and even Wendy's, eventually the enthusiasm goes away. They peter out, and we wind up with another down stock. So don't get too caught up in Robinhood. It's a payment for order flow play. There's a lot of that out there. And I think what Robinhood has done to differentiate itself from like a Schwab or an E-Trade, which is actually owned by Morgan Stanley now, believe it or not, it's just that they have gotten really good at social engineering and keeping people on the app and getting them to trade more and more and more, which we all know is actually the worst thing that you could do for your financial well-being. Okay, so I'm going to get back to the LinkedIn user over here. I'm sorry to call you a LinkedIn user, but that's how your name comes up. I don't know why. No big deal. No sweat. No, you said you can't mention stocks. That's what I was referring to. Okay, I was curious which you preferred, Google or Amazon, to add a little small amount. I just keep waiting for them to go down. Somebody asked me that recently in a live stream. I'm not sure if that was you or not, but so here's the deal. I have a securities license, and I'm not saying, oh, wow, I do have a securities license. Ooh, big deal. A lot of people have one. It's just that the rules of my compliance industry rules disallow me from making buy and sell recommendations um, in any media format. Like we could talk on the phone and I can tell you what stocks I like, which stocks I want to buy. I could tell you which companies I think are doing well, but there's a fine line between making an all-out recommendation saying you should buy this or that. And if I say which one I prefer, for example, Amazon or Google, it it will be implied that I'm making a buy recommendation. And if you buy it and lose money, you could potentially hold me accountable for that, even though you're making the decision as an adult to buy that stock. I know it's just so roundabout, and I have to tell you, a lot of these rules I really I can't stand, but I have to follow them. So that's why, if you want to know, I can't specifically make a buy recommendation. Just turning down the volume on my headset. I can't specifically make a buy recommendation. So saying which one I prefer. Now, if you want to DM me, I could tell you. Um, but I do believe in diversification, so that maybe will help you with my answer. Diversification is a strategy that we use to reduce risk. It's a risk reduction strategy, but it doesn't necessarily protect your portfolio from going down in a generally down market. So it's not a return strategy. Like if you want a high return strategy, you would own a few stocks and you know just focus on a concentrated amount of stocks. That would help go for reward. But if you want to help reduce risk, you go with diversification. I would not do that, FYI. I know. I appreciate it. Thank you. Thank you very much. Okay, I got you. Thank you very much. I appreciate your understanding. I really would like to give you like my buy list of what I'm looking at. Well, I do give you what I'm looking at. I just can't say you should buy this or buy that. Like Meet Kevin is a really good YouTube channel, and he was on yesterday saying, with the whole video, should you or should you not specifically buy Robinhood? And he says he owns it and he's going to hodl it. Well, he says hodl. I say hodl. Tomato, tomato. But he's from California. So maybe people from California, they're a little different. You are very welcome. Okay. So Robinhood basically had a lot of shares come out. I think a lot of people bought the stock on a whim, on a spec. It went up on heavy volume. The volume today, it was over 100 million shares yesterday. Today was like 73 million shares, and the stock came down. So that's really what that was. A combination of profit taking and insiders taking advantage of a big rally to unload some of their stocks. Okay. We went over that one. We went over the hood. All right. So next time somebody asks me what's good in the hood, right? All right. So Goldman Sachs. All right. Goldman raises their year-end S&P 500 forecast to the highest on Wall Street, all right, because of low rates. Now it's interesting because Citigroup and Wells Fargo, I showed yesterday in the show, that they are about 4,000 for the year-end target on the S&P 500, which is a good deal lower than where we are now. The S&P went out today at 4,429. But Goldman now comes out and says on low interest rates, continued good earnings, we're going to see 4,700 this year. And that's what makes this so confusing, is that you have analysts and all of us, we look at the same data and we come up with completely different forecasts. I mean, you're looking at the same data as me, the GDP, interest rates. We make our forecasts in terms of employment, in terms of what the COVID variant could do. There's so many factors that go into a forecast. The bottom line really is invest based on your own personal finance. If you have a very long time horizon ahead of you, well, I think a lot of the stuff's probably not going to matter too much. Maybe there's a time you want to reconfigure your investments, rebalance a little bit because you're 5 or 10 years older since the last time you did it, and that I am all for. In fact, I preach that all the time. But I think whatever we're talking about today, we're probably not going to even remember 5 years from now, even a year from now. I don't remember exactly what I spoke about August 5th of 2020. I was here doing this live stream, but man, I don't remember exactly what I was talking about. I'm giving you the update for now. And I think the market rebounded today because the labor numbers today gave a little bit of a sigh of relief that said maybe the economy is not getting so weak because of the Delta COVID, the COVID variant. And we're going to get more confirmation of that or not confirmation of that tomorrow with the non-farm payroll number. We're expecting 845,000 jobs created. We want to see a little bit of wage growth. We want to see hours worked up a little bit, not too much, because if it goes up too much, then it's inflationary and the Fed will go, oh no, that's way too inflationary. We're going to start tapering the end of this year. And it's almost the end of 2021. I know you don't want summer to be over if you're in the northern hemisphere. It's kind of depressing to think about how quickly it's going. But hey, if you're in the southern hemisphere, you want this time to fly by because you're just right in the middle of winter right now, right? So that's the deal with that. And then let's talk about the dollar, okay? And this is because Nelson asked about it yesterday. So the dollar means a couple of things. It's one of those esoteric things where, so many things are affected by the dollar, and the dollar is affected by so many things. But when we have a strong dollar, or the dollar strengthens like it did today, and you see long-term rates go up because maybe people think the economy isn't as weak as we thought the day before, you see the dollar go up, and that helps the inflation trade a little bit, and that helps bring back some confidence that the United States is a worthy economy of investment, okay? So that's one thing about the dollar. When the dollar is weak, though, that could be good for earnings, but it's not so great for inflation. When the dollar gets stronger, it actually could help with inflation a little bit too, to a certain extent. So that's the deal with the dollar. I don't focus necessarily on the dollar so much. We always look at the dollar compared to other currencies. The dollar in and of itself doesn't mean anything like any currency. Currencies are valued off of each other, not in a vacuum. So, but if the dollar is weak or we're printing too many dollars and we're debasing the dollar, I think then you have to take a look at it and like this and say, yeah, but compared to other global currencies like the yen or the euro or the yuan, that's the Chinese currency, we're still looking better than they are. Yeah, but we're all getting sicker from currency debasement because now everybody is in the fiat currency game. We're all using paper money, electronic credits. I'm not talking about crypto when I say electronic credits. I'm talking about dollars. Currency basically today is an electronic format. When you use a credit card, you're not using cash. So what are you using? You're just sending electrons all over the place that tell your bank to move your money somewhere else. Or when you pay your credit card bill, you're going online and you're just electronically telling your bank to pay a bill. Okay. But these are all electrons that are eventually affecting the dollars that are held at banks. Hope that makes sense. Anyway, we're getting on a little bit here in time. So thank you very much. I don't do the live stream on Fridays, but I do typically send out a blast email. If you went in on the blast email, hit me up with your email address, either in a post in the comments now or DM me, and I'll add you to the list. It is just for me, that email list. I do not sell it. I do not share it. It is just for distribution of my own content. You can catch me on Instagram. Every show, the next day, I come out with 1 or 2 highlights from each episode. So if you miss a show or you want to get back, check back on an important point, follow me on Instagram or LinkedIn or Facebook or YouTube, and you'll see the 1 minute to 2 minute snippets from the shows before. Okay, that's about it. Thanks, guys. Have a great weekend. Bye.